What if the stocks you choose in 2026 decide your financial position for the next 10 years? While most people are distracted by headlines, smart investors are quietly buying companies positioned for massive long-term growth. In this video, we're breaking down the top 10 stocks experts are watching in 2026. Not hype stocks, not rumors, but real businesses with strong fundamentals, future-proof models, and serious upside potential. If you want to invest like professionals and understand why these companies matter, this breakdown is for you. We'll start with part 1. Why 2026 is a critical year for stock market investors. The year 2026 represents a turning point for the stock market. After several years of economic uncertainty, rising interest rates, and rapid technological change, investors are entering a phase where long-term strategy matters more than short-term speculation. Unlike previous cycles dominated by hype, 2026 is rewarding patience. 2026 is rewarding patience, fundamentals, and disciplined decision-making. One of the biggest reasons for this is the stabilization of macroeconomic conditions. Inflation, while still monitored closely, is no longer the uncontrollable force it once was. Interest rates have found a more predictable range. This stability creates a healthier environment for companies with strong balance sheets and sustainable revenue models to grow. Another major factor shaping 2026 is the maturity of innovation. Artificial intelligence, cloud computing, and renewable energy are no longer emerging concepts. These industries have moved into execution mode. Companies that invested early are now monetizing their technology and expanding margins. At the same time, weaker competitors are falling behind, creating clearer winners and losers. For investors, this shift is critical. The market is no longer rewarding companies simply for potential. Earnings quality and cash flow consistency are now the main drivers. Fundamentals have reclaimed their importance. Institutional investors are already responding. Pension funds and hedge funds are increasing exposure to companies with durable growth prospects. These investors are not looking for quick gains. They are positioning portfolios for the next 5 to 10 years, focusing on businesses that can adapt. Retail investors, however, often lag behind institutional trends. Many still chase short-term price movements without understanding the underlying business. This creates an opportunity. By identifying high-quality companies that experts are accumulating, you can align yourself with long-term market leaders rather than speculative trades. Risk management also plays a bigger role in 2026. Volatility has not disappeared, making diversification essential. Don't bet everything on one idea. Another important trend is demographic change. Millennials and Gen Z investors now represent a significant portion of the market, and their preferences are influencing which companies thrive. Businesses that embrace digital platforms, sustainability, and transparency are attracting both customers and investors. Companies resistant to change are losing relevance. Growth is no longer just about revenue expansion. It's about efficiency, scalability, and resilience. Companies that grow without excessive debt are outperforming. This environment sets the stage for the stocks we'll discuss in this series. Each company has been selected based on financial strength, industry position, and innovation capability. The first stock on our list for 2026 is one that continues to dominate expert conversations across Wall Street: NVIDIA. While many investors associate it with AI, the real story goes much deeper. NVIDIA has positioned itself as the backbone of modern computing. It is no longer just a semiconductor company. It has evolved into a full-platform technology leader. In 2026, NVIDIA sits at the center of the global AI infrastructure build-out. Its GPUs power data centers, autonomous vehicles, and advanced research. One of NVIDIA's strongest advantages is its ecosystem. CUDA, the proprietary programming architecture, creates a powerful moat that makes switching costs extremely high. Financially, NVIDIA remains one of the strongest companies in tech. Revenue growth is driven by expanding margins as they sell higher-value software solutions. Today, enterprise and data center customers represent a much larger share of revenue. Cloud providers, healthcare, and finance all rely on NVIDIA's hardware. NVIDIA also benefits from global diversification. Its customers span multiple regions, providing some insulation against regional disruptions. Critics argue that NVIDIA's valuation is too high. However, when a company defines an entire category and controls future infrastructure, premium valuations can be sustained. NVIDIA is actively developing solutions for robotics, digital twins, and autonomous systems. These areas represent massive optionality for the second half of the decade. While competition is increasing, NVIDIA's pace of innovation and integrated approach keep it several steps ahead of rivals who rely on fragmented solutions. For investors in 2026, NVIDIA is a foundational investment in the future of computing. Next, we'll look at a company that focuses on consumer ecosystems: Apple. The second stock on our 2026 expert list is Apple. While many investors believe they already understand it, experts argue that Apple is often underestimated for its ecosystem control and customer loyalty. Apple's biggest advantage is its ecosystem, a tightly integrated network of hardware, software, and services. Once consumers are embedded in this environment, they rarely leave. From a financial standpoint, Apple is a cash-generating machine. Even in slower periods, it produces massive free cash flow, allowing for dividends, buybacks, and R&D. One of the most important shifts has been the growth of its services segment. These high-margin, subscription-based offerings reduce reliance on hardware upgrade cycles. Apple doesn't need to be first to market. Instead, it focuses on refining technology and delivering polished user experiences. Investors see this discipline as a core strength. Apple's brand power allows it to command premium pricing globally. Emerging economies present long-term opportunities as income levels and digital adoption rise. Their investment in custom silicon has delivered significant performance improvements. This vertical integration reduces reliance on external suppliers and enhances product innovation. Regulatory scrutiny remains a concern, but Apple's resources and compliance capabilities position it better than smaller competitors to adapt to these changes. Apple is also quietly positioning itself for future growth in health technology and spatial computing. These represent long-term optionality for the rest of the decade. For investors in 2026, Apple represents stability combined with strategic growth. Next, we'll transition to a company driving transformation in enterprise software, Microsoft. The third stock on our expert list for 2026 is Microsoft, a company that has successfully reinvented itself multiple times. Today, it stands as one of the most influential players in enterprise tech. Microsoft's strongest growth engine in 2026 is Azure. Businesses worldwide rely on it for storage, security, and computing power, creating predictable recurring revenue. What separates Microsoft is its ability to integrate AI directly into existing products like Office 365 and Teams. This strategy increases productivity while strengthening their ecosystem. Financially, Microsoft is exceptionally strong, generating consistent growth while holding significant cash reserves. This allows them to invest aggressively in R&D and reward shareholders. Microsoft holds deep enterprise trust. Many organizations rely on them for mission-critical operations. High switching costs protect them from rapid competitive displacement. As digital threats increase, Microsoft has invested heavily in cybersecurity tools integrated directly into its platforms, creating additional value and revenue channels. In 2026, Microsoft is also benefiting from the permanent shift to remote and hybrid work models, with productivity tools supporting businesses everywhere. From an investor perspective, Microsoft offers a rare combination of innovation and predictability. It pushes into new tech from a position of strength, not speculation. Microsoft remains a cornerstone holding for long-term portfolios. Next, we'll explore a company reshaping e-commerce and logistics, Amazon. The fourth stock on our 2026 expert list is Amazon, a company that has consistently reshaped entire industries. Experts view Amazon not just as an online retailer, but as a technology powerhouse. Amazon's logistics network is one of the most advanced in the world. This infrastructure is a competitive moat that competitors struggle to replicate, driven by Prime and automation. Amazon Web Services, or AWS, has become the crown jewel. It accounts for a significant portion of profits and continues to see strong enterprise adoption globally. Amazon leverages machine learning to enhance efficiency and reduce costs across its operations. From AI-powered logistics to recommendation engines, AI is embedded everywhere. Financially, Amazon remains in a strong position. Revenue continues to grow in both e-commerce and AWS, providing the flexibility to invest in new technologies and markets. Global expansion supports Amazon's long-term outlook. While the US is its largest market, it has successfully entered multiple international regions, tailoring services to local needs. Amazon consistently invests in innovation, from drone delivery and cashierless stores to healthcare services. These initiatives provide massive optionality for the future. Amazon is a company that not only adapts to change, but actively shapes the markets it participates in. Next, we'll explore the leader in digital payments, PayPal. The fifth stock on our expert list for 2026 is PayPal, a leader in digital payments and financial technology. As global commerce moves online, PayPal has become a cornerstone of digital infrastructure. One of PayPal's greatest strengths is its scale and brand recognition. Millions of merchants and consumers trust it for online transactions, creating a strong moat against competitors. PayPal's diversified business model sets it apart. While online payments are the core, it has expanded into Venmo, digital wallets, and merchant financing, deepening user engagement. Expansion into international markets, particularly in regions with high mobile adoption, provides long-term growth. PayPal's cross-border capabilities further differentiate the platform. Innovation remains a central focus. PayPal invests heavily in blockchain, digital currencies, and AI-driven fraud detection, positioning itself to benefit from emerging fintech trends. PayPal's vast merchant network strengthens its position. More merchants attract more consumers, and more consumers attract more merchants, creating a durable advantage. Their data capabilities provide insights that drive product development and personalized services, allowing PayPal to optimize services and enhance engagement. PayPal scales with the global economy, capitalizing on e-commerce and digital wallets. Next, we'll move from fintech to healthcare with Johnson & Johnson. The sixth stock on our expert list for 2026 is Johnson & Johnson, a cornerstone in healthcare. Experts emphasize that healthcare remains one of the most resilient sectors for long-term investors. J&J's diversified model is key. It operates across pharmaceuticals, medical devices, and consumer health, ensuring multiple revenue streams and global brand recognition. One of J&J's greatest strengths is its research and development. With billions invested annually, their pipeline includes high-potential drugs targeting oncology and immunology. Financially, J&J is exceptionally robust, with consistent revenue growth and one of the healthiest balance sheets in healthcare. This allows for continued investment and shareholder returns. J&J's global presence reduces dependency on any single market. In 2026, global demand for healthcare continues to rise, driven by aging populations and increasing access. J&J is increasingly integrating technology into healthcare. AI-driven diagnostics and robotic surgery systems are becoming part of its innovation-driven portfolio. Healthcare stocks tend to outperform due to inelastic demand. J&J's dividend history is one of the longest and most reliable, appealing to both defensive and growth-oriented investors. Johnson & Johnson represents a high-quality healthcare investment for 2026. Next, we'll transition to energy and the clean power transition with NextEra Energy. The seventh stock on our expert list for 2026 is NextEra Energy, a leader in clean energy. While traditional utilities are seen as slow-growing, NextEra combines reliability with aggressive renewable expansion. NextEra operates through regulated utilities for stability and renewable generation for growth. This dual structure provides a balance that appeals to both conservative and growth-oriented investors. Scale is one of their greatest advantages. As the largest generator of wind and solar in North America, NextEra achieves economies of scale that competitors struggle to match. Financially, NextEra demonstrates a strong combination of growth and stability. Predictable revenue from utilities and steady dividend growth make it a standout pick in the energy sector. Regulatory tailwinds support their outlook. Governments are implementing policies to encourage renewable adoption and reduce carbon emissions, providing long-term catalysts for expansion. NextEra invests in advanced energy storage and grid optimization. These technologies ensure efficient and reliable power delivery, enhancing the value of intermittent solar and wind. As populations grow and economies electrify, demand for clean energy is projected to increase dramatically. NextEra's track record makes it a top candidate to capture this growth. NextEra Energy is a technology-driven, growth-oriented energy giant. For investors seeking clean energy exposure without sacrificing reliability, NextEra is a compelling opportunity.